We begin with the MPC meeting as the Bank of Ghana prepares to hold its 106th Monetary Policy Committee meeting from Wednesday. Players in the financial sector want the regulator to make decisions that will boost consumer confidence. Even though the exchange rate regime has been fairly stable for some time now, the inflation rate has seen a jump to 23.6%, the highest in 18 years. Now, speaking at a recent Facts Behind the Figures session organized by the Ghana Stock Exchange, Managing Director of Cow Bank, Philip Oredu, was hopeful the central bank will announce monetary policy measures that will propel economic growth by the next half of this year.
Economy as is now is still quite fluid. The MPC is going to meet quite soon, and we are all sure they are going to react to the hike in rates. Exchange rates, at least at the moment, we're seeing some sort of stability on the market. We see inflation going up, which obviously would impact on consumer behavior, which will also then impact on growth as a whole. So we see some sort of moderated growth at the beginning of the year, though getting to the tail end of last year, we had started seeing some sort of signs when it came to challenges with the yields on the Eurobonds. Obviously, we were not expecting it to get to these sort of levels with respect to inflation rate, the rate of depreciation of the currency, the current interest rate regime in which we are. But we expect that various policy measures, various fiscal measures, as has been put in place by government and by the central bank, would address these sort of concerns. And we see some sort of moderated growth, though we were expecting quite an improved growth this year. I think that growth is going to be stemmed a bit throughout the year.
All right, so that was the Managing Director of Cow Bank PLC, Philip Oredu, on the MPC meeting that is going to get underway tomorrow and what he anticipates. Well, the Institute of Economic Affairs is projecting a 2 percentage point increment in the policy rate by the Bank of Ghana to a further 19%. This, it believes, will help narrow the gap with the rise in inflation and also ease, to some extent, the risk of foreign currency outflows. However, the move will increase the cost of living and doing business because lending rates will go up further, whilst money supply will reduce. Joining us on phone, Dr. John Kwache, who is Head of Research at the Institute of Economic Affairs. Grateful for your time this afternoon, sir. All eyes on the Monetary Policy Committee as they begin their meetings tomorrow. You have served on that committee before. What would be the key considerations as they meet to decide the policy rate amid rising inflation? Can you hear me, Dr. Kwache?
Yes.
Okay. So I was asking what the key considerations would be as the MPC prepares to meet tomorrow amid rising inflation. Did you hear me, Mr. Kwache? All right, I'm not too sure if Dr. Kwache heard me on the phone. We'll try and establish connection with him. But basically, as I've been pointing out, the Monetary Policy Committee of the Bank of Ghana is preparing to meet tomorrow. Why this is crucial is because inflation is rising, and we are hoping that the policy rate announcement will sort of ease consumer spending and also reduce the pressure that we have seen when it comes to inflation. I'm going to try one more time, see if we can hear from Dr. John Kwache. We are still trying to establish contact with him. So we'll move on to the next story, which has to do with the accountability for Elevy. The Ministry of Finance has revealed that government will publicly account for revenues accrued from the electronic transaction levy twice before the end of the year. Deputy Finance Minister Abnor Sasari says the first public accountability will be part of the mid-year budget review in July. We'll bring you that report in a bit, but I'm told that we have Dr. Kwache on the line now. Can you hear me, sir? Can you hear me, Dr. Kwache?
Yes.
All right. And so my question to you was that what would be the key considerations of the MPC as they prepare to meet tomorrow amid rising inflation?
Yeah, so as I stated in my statement, you know, the policy rate is currently at 17%. Inflation is at 23.46%. The gap is, you know, quite wide. So naturally, you know, the MPC should be considering moving the policy rate up. But you see, the gap is so wide that they cannot do it, catch up in just one meeting. So I am proposing that you know, they should increase the policy rate by about 200 basis points at this meeting. You know, that should be the immediate response. And it is because, as I said, inflation is virtually, you know, running away. We are experiencing inflation the highest in 18 years. Of course, it's not only Ghana that is experiencing inflationary pressures. All over the world because of COVID and then the Russia-Ukrainian war. But it looks like ours, you know, is quite excessive, and it caused lots of hardship, you know, in the economy. It to the extent that all goods, the price of goods and services have, you know, risen sharply. So now the first, you know, instrument or tool available to the central bank is a policy rate. You know, but I've also said that beyond that, they should also look at the sources, you know, the supply sources that are causing inflation. In other words, if you look at food, you know, the exchange rate, you know, transport, fuel, and, you know, engage with government, work with government to see how you can also mitigate the pressures coming from those sources so that you don't rely exclusively on the policy rate.
Right. And you have said that anything below the 200 basis point is a weak response from the central bank. We've seen that they increased it at the previous meeting, but we are yet to see the impact. So how significantly will a further 2 percentage point increase help in easing inflation? How long before we see the results?
Yeah, that's always that's the question, you know, because you don't know even how much impact that the adjustment is going to make. So even though they increased it by 2 basis points the last time, you know, the effect has not been felt, you know, yet. But the inflation is still on the rise, and the gap has, you know, widened, and the markets are looking at it and saying, what is going to be the Bank of Ghana's, you know, response? And that's also, I mean, one implication of the gap is that financial assets denominated in cedis, you know, will become less attractive. And so there's a risk that, you know, investors will start considering, you know, moving their funds out of, you know, investments in Ghana. So you see, when you move up the policy rate, other rates like the treasury bill rate will also respond and make, you know, financial assets denominated in Ghana cedis more attractive. So your eye is on the inflation, your eye is also on the exchange rate. That is the kind of balancing act that you have to do.
My final question to you is, reading through your statement, you call for a comprehensive approach in easing inflation, and you say that what we decide on should be something that suits our economy. Can you explain further?
Yeah, you know, inflation targeting is more suited to mature economies, you know, where the supply side, they don't have serious supply side constraints. So in those economies, inflation is more of a demand phenomena. You know, it's driven more by demand. But when you come to our type of economies, you know, there's a serious constraint on the supply side. So if you rely exclusively on an instrument that is more of a demand management instrument, you will not be entirely successful in addressing the inflation on a durable basis. So that's why I'm saying I'm calling for a more comprehensive approach. I'm not saying dump the inflation targeting framework. I'm not saying dump it completely, but supplement it with other measures that attack or target the supply and cost sources of inflation in our type of economy. That's the point that I'm making.
All right. Thank you so much, Dr. John Kwachi, Director of Research at the IEA. We continue to keep our eyes on the MPC meeting. Once it begins tomorrow, see the outcome in the course of 1 week. We'll hopefully hear whether they would agree with the IEA on increasing it by 200 basis points. Now, back to our earlier story, the Ministry of Finance has been engaging the Information Services Department on the implementation of the electronic transaction levy. And there, the Deputy Finance Minister, Abdul Sassari, said the first public accountability for the e-levy will be part of the mid-year budget review in July. Here's more in this report.
The government says the implementation of the electronic transfer levy will help rope in more people into the tax nets. Before its passage, one of the major reasons for rejection was accountable application of revenue. Deputy Finance Minister Abdul Sassari has been explaining how the government spends its revenue.
People say that they don't even know what government uses the revenues that we raise for. When you look in the budget, government is hoping to raise about 80.1 billion by close of 2022. In that same budget, government is hoping to use 35.8 billion Ghana cedis of that tax revenue to pay salaries for all government workers. Again, when you look in the budget, we are hoping that we will be able to close the infrastructure deficits by building more schools, attending to our roads and everything. In the budget, government is hoping to spend about 16 billion of that revenue to address this infrastructure gap. That is why there is the need to support government. Let's come together, support government in its drive to raise more revenue.
Meanwhile, many have called for an accountability mechanism to track the revenue accruing from the e-levy. Mrs. Oseasare says the government will publicly account for e-levy revenue before the end of 2022. She spoke on the sidelines of a training program in Kumasi for staff of the Information Service Department drawn from across the country.
We put it in the levy, how we are going to account for the monies that have been raised under e-levy. But remember, we always account for all revenues that are raised. We are going to give an account of how much we have been able to raise in the mid-year budget review, and also 2 months after the end of the year, we will be able to give an account of the second, how much we have been able to raise for the second quarter of the year. And in there, we will be able to also show or tell Ghanaians what we have utilized these monies for. And like I mentioned, e-levy is not the only revenue measure in the 2022 budget. There are several revenue measures, and there are several revenue tax handles. There are several tax handles in there. Many others in there, including the sanitation levy, the COVID-19 levy, and the e-levy. And together, we are hoping to raise about 80.3 billion Ghana cedis. And e-levy happens to be one of the revenue handles or measures that government has put in the budget. So we are going to give an account of all the revenue measures that will add onto the 80.3 billion. But clearly with the e-levy, it is stated in the Act that we should give an account of how much we have raised in the mid-year and also 2 months after the end of the year for the second half of the year, how much we've been able to raise. So latest by the 31st of July, we should give an account of how much we have been able to raise and how much we have spent on monies that have come to us in the mid-year budget review. So in July.
The training was initiated by the Ministry of Finance and the Ghana Revenue Authority, together with other relevant agencies to help address misinformation about the implementation of the e-levy. Prince Apia reporting.
Well, if you are an MTN shareholder, this next story would be of interest to you because shares have fallen by 18.9% off its year beginning price valuation, and a Business and Financial Times report attributes it to e-levy. Well, is that the case? Joining me is Gideon Amweniche of Databank Research. He's an equity analyst. Grateful to have you on the program this afternoon. What's happening with MTN shares? What are you reading?
Okay, good afternoon. Year to date, we've seen MTN record a decline of 18.92%. And we attribute this to also some issues that are of concern to investors, and basically we attribute it to the e-levy implementation. MTN started this year with a year beginning price of 1 cedi 11 pesos, and when the implementation of the e-levy was announced, we saw some drop in the stock price. And so basically, investors have some sentiments about the implementation of the e-levy and its impact on the MoMo revenue segment of the company. That's it.
All right, and we hear that's having an impact on the stocks because it's kind of dragging things a bit. Because technology stocks, MTN, for instance, has a huge stake when it comes to trading, right?
Yes, I mean, it does. So MTN contributes about 20% of the market capitalization of the Ghana Stock Exchange. And so any price decline that we see in MTN has a significant effect on the composite index. And so year to date, we see the composite index has declined negative 8.15%.
And generally, we've seen that market performance has not been impressive. We are seeing a minus 8.16% year to date. How do you, and we are gradually getting to the end of the first half of this year, how do you anticipate things will be like getting to the next half?
Okay, so from a fundamental perspective, we are optimistic that the stock market will see a recovery. If we look at the fundamentals of the companies that are listed on the exchange, particularly the banking sector stocks, most of them are trading below book value, and that serves as, an entry point for investors. Though there are some concerns about the economy and its impact that investors are expecting to have on the banking sector stocks, we believe that the banks are well, positioned to withstand any headwinds in the way, and they are going to, give investors good, bottom lines. Apart from that, MTN also, despite the fact that it has seen some losses in the first half, we believe the stock has, still an upside potential, and so. Although investors are pricing in the impact of the e-levy implementation on the MoMo business, we believe that as time goes on, MTN's data segment is growing rapidly and will be able to offset some of the cost implications of the e-levy on the MoMo, the general revenue line. And so investors will gradually begin to gear towards the stock again. And so we are optimistic that the stock market will see a recovery this year.
Final one, you're projecting some good business for SIC Insurance at the beginning of the week when I heard your update on stock market performance. So right now, which ones are the gainers? Who is gaining? Who is losing?
So from a year-to-date perspective, the financial, for gainers, we've seen ETI gain about 35%. We've also seen Trust Bank gain about 18%. Guinness has gained about 25%. And then Enterprise has also gained about 18%, in addition to SIC, which also, is seeing some significant demand on the market.
All right. Gideon Amweninche, grateful for your time. Data Bank Research Equity Market Analyst. We are really grateful that you joined us for this segment. Well, let's move to a different kind of market, the tomato market, because stakeholders in the value chain have expressed worry over the shortfall in supply, leading to rising costs of the produce. The unfavorable rainfall pattern in parts of the country, rising fuel costs, and conflict in Burkina Faso are challenges adversely affecting tomato supply. A box of tomatoes sold at 1,500 cedis a couple of months ago currently sells at 2,500. Traders say they recently recorded a glut in supply, but are now hit with a shortage of supply. There's more in this report by Mona Lisa Frimpong.
The price of one of the most important ingredients in food preparation, tomatoes, has shot up on the market. For 16 years, Gifty Azope has been the favorite go-to person for delicious rice, yam and stew at the Bantama market. But In the past 2 years, her customers are gradually turning away. Gifty is worried.
First, I made 20 cedis. But I say I made 30 cedis.
I was buying tomatoes 20 cedis daily. Now I buy 30 cedis.
She blames her customer loss on the prices of vegetables on the market, especially tomatoes. Tomatoes sold expensively on the market have forced her to reduce the quantity used in preparing her stews. She dishes out little stew for every purchase. But her customers argue that rice with little stew does not help their appetite. Gifty is in a limbo as her profitability is affected by the rise in ingredients used for cooking.
Many of my customers prefer scorched rice.
Tomatoes are no longer sold at the usual 1, 2, or 3 cedis on the market. Now, 10 small pieces of tomatoes are priced at 5 Ghana cedis. Obethia has operated a local chop bar for over 25 years. Having experienced the price hikes over the years, she has given up. Lately, Obethia buys more canned tomatoes to substitute the fresh ones.
I have no option than to buy the tomatoes.
The canned tomatoes for weeks now have been the alternative for many food vendors. Traders who sell the commodity have been cashing in for weeks now.
This month is yeto. It didn't tell me I say fresh tomatoes. I said,
the sales of tin tomatoes are booming.
I said the first 2 cedis are all turned for the 10 cedis. And tomato don't me for don't talk fresh tomatoes. And Tinina only be 30 tomatoes.
Prices of the canned tomatoes were stable, but the demand has led to a hike in the price of some popular brands.
The price of tin tomatoes goes up every 2 weeks.
In times like this, the demand for soft and squishy tomatoes becomes high. Though it is on the verge of spoilage, it is cheap. Traders say some food vendors unable to afford the fresh and canned tomatoes resort to these ones.
When it gets rotten, it fails. The tomatoes on the Ghanaian market are currently imported from Burkina Faso, but there is a shortage of supply due to the conflict in that country. This is an attribute of the high prices of tomatoes on the Ghanaian market. Traders from other regions troop to Burkina Faso.
The tomato paste industry, on the other hand, has been Ghana's neglected gold mine. Many factories which were operating have been shut down. Perhaps if these factories were in full operation, maybe they could produce millions of tons of tomato paste that could meet Ghana's growing demand. Tomato traders are recording a reduction in profit. They want farms in the country to produce enough tomatoes to beat the exported produce from Burkina Faso.
It is a yanya opinion be announced be a buying so masne.
If the government could support farmers with irrigation system, there will be high yield. Mona Lisa Frimpong reporting.
And it's sad we can't produce enough tomatoes here in Ghana. That's the marketplace. Thanks for watching. My name is Daryl Kwao. More news on our website, myjoyonline.com/business. The day's latest stories from over there. Goodbye.